Friends, I want to welcome you all to the next of sFOX's webinar series, focusing specifically on asset allocators and other sophisticated investors and players in the asset sector, the asset class of crypto. I'm sFOX's head of content, Aaron Suduko. I'm joined by two wonderful guests, one from the sFOX side, Daniel Hinton, our head of finance and operations over at sFOX, and from Samara Alpha Management, Adil Abdulali, Chief Investment Officer. Gentlemen, thank you so much for joining us. I'm really excited to see where our conversation is going to take us today. The topic, if you've just stumbled in here by mistake, I don't know how you did, and we could talk about that afterwards. But the title is The Science of Asset Allocation in Crypto. And I'm tremendously excited about this one because really the goal with sFOX's content strategy and approach to educating the market in general is that crypto has been around for really quite a while at this point. If you think about it from the dawn of the Bitcoin white paper, or even some of the projects that predated Bitcoin before that. And while the media doesn't always represent it as such, there's a lot of professionalization and sophistication that has happened in the market, especially in the last few years, which has been exciting to see. And especially if you're someone who's actively involved in asset management or considering how to take your asset management in the crypto world or more broadly to the next level, it can be really valuable to get connected and get insights with some of the major players in the space. And certainly Samara Alpha Management is a great example of such an asset allocator. And so really we're going to have a free-ranging conversation with them from the asset allocation side, with sFOX from the prime dealer side, and think about just what it takes to build a crypto strategy, what the market looks like nowadays in terms of the various factors to think about in designing a strategy. And when it comes to asset allocators like Samara Alpha, what they look for in potential managers to allocate funds to and add to their own activities. So it's going to be hands-on. We're going to go deep. We're going to hopefully leave you with some practical insights. I'm really looking forward to it. But with that, gentlemen, I wanted to give you just a moment before we dive into the conversation to introduce yourselves and tell us a little bit about your respective firms. Adil, let's start with you.
Great. So Samara Alpha Management started early this year, but the team has been together in various forms since the late 90s, believe it or not. Some of us work together in the derivatives world on the sell side, mortgage derivatives, all of those types of things, building models, trading large portfolios on a market neutral type effort. In 2003, actually, we started, some of us investing in hedge funds. So I started there at Protege Partners, which was a small and emerging manager platform. So we actually seeded hedge funds. We seeded over 40 hedge funds during my tenure there, long short equity, credit, all sorts of things like that. We also invested in over 450, arm's length hedge funds. Again, portfolios run for all the big allocators around the world. And so we learned a lot about starting hedge funds and shutting them down and things like that. In 2015, as some luck would have it, we got introduced to the MIT Digital Currency Initiative by Joey Ito out of the Media Lab. They had just taken on some of the Bitcoin core developers because those developers were on the ropes after the Mt. Gox scandal and the Silk Road scandal. So MIT actually put some money behind them, hired them as developers. We put some money into the Digital Currency Initiative, and that introduced us to the ecosystem of kind of fund managers in the space very, very early on. So we met like Olaf before he started Polychain and Richard Craig before he started Numerai. And those investments were very, very good. So it certainly whetted our appetite, and we dug more into the space. Fast forward to when Protege actually shut down because the founder passed away in 2019. I had hooked up with the CEO of Samara Alpha Management, Wilfred Day. Wilfred was a compatriot of mine on the credit derivatives side from the Wall Street days. In fact, he and I traded the same book in the same fund, same desk at Barclays Capital for a while in different years. He had gotten into crypto. He's got a deep knowledge of it. He ran Enigma Securities, which is a over-the-counter OTC broker. He ran OKX's non-China business and invested in a lot of VC projects in the space. And he also ran Securitize's asset management division, Securitize Capital, where I joined him in 2022. And we ran that. We had a market neutral fund of funds, and we're carrying that forward through Samara Alpha Management, which is an independent company, but funded by Samara Asset Group, which is a large Bitcoin holding company. So there we have it.
Amazing. Well, I'm excited to drill down into all of that and more. Before we do so, Daniel, let me turn it over to you, my friend. Tell us a little bit about yourself and your role at sFOX and what sFOX is all about.
Yeah, happy to, Aaron, and very, very glad to be sharing the stage here with you, Adil. We here at sFOX, we've been around about the same amount of time, back to the 2014-15 era. And my role at the company as head of finance and operations, really, it's a very fun position to have, because you get to interact across the entire gamut of the operations that the company undertakes, right? So yeah, it's fantastic to see the day-to-day of what clients are struggling with. And as I'm sure we all know, there are plenty of things that come out of the woodwork and come out of nowhere that really make you reassess where you're focusing and come to the top of your priority list. So it's great working with clients on a day-to-day basis. It's also just great to see the development of the industry. From taking it a little bit back to sFOX and the way that we've gotten to where we are today, the company back in the 2014-15 era, that was a big impetus for starting the company, was seeing the fewer range of options that you had for execution services in the industry, and then taking that approach to say, let's give the market a professional experience to have best execution in this market. There would be multiple percentage point gaps between the prices at different venues back in those days. The market has definitely firmed up a lot and gotten a lot more sophisticated since then, but that concept still does pervade the industry of there's not uniform depth, uniform price, uniform fees, spreads, all those types of things. Also just availability, right? These are in a lot of cases nascent platforms that are just hardening their own infrastructure, and downtimes are not uncommon at even the biggest name crypto exchanges out there. So at sFOX, we really wanted to start on the execution services side of things. And then as we grew and got on different client types, we kind of transitioned a little bit of our focus toward tooling and running the business of being in crypto, right? So as we saw funds grow, as we saw teams grow and kind of diversify in the sharing of responsibilities across teams, we've started focusing on building products to help those types of teams operate securely and professionally in the space. And even today, there are not all that many places you can go that have true segregation of permissions, maker checker capabilities, workflow automation, these types of things that we have really pioneered here at sFOX to a large degree. Layering in all that into a regulated offering that deals in both well-qualified counterparties, but also well-qualified assets that we trade in, and a lot of other products and services that we'll talk about today. So that's a good roundup of how we got here.
I would agree with
Hey,
that.
Daniel, if I could jump in quickly,
Please.
about, because when you talked about the evolution of the technology, how the markets were very, very inefficient and they're getting better. It's actually funnily enough, a double-edged sword. Like when they were very efficient in 17, 18, they were sort of exchange arb, or the cross exchange arbitrage was quite easy. You could just be a person looking at screens and buy Bitcoin at one price and sell at the other, and it was super, super easy. Now things have gotten much more efficient, but they're still way less efficient than the New York Stock Exchange or anything like that in the global stock market. So there's still a lot of opportunity in like buying coins in one price, selling them at another, except you can't do it by hand. It has to be algorithmic. It has to be with multiple technology bots out there. And so things are becoming a lot more sophisticated. Still more money to be made in crypto than equities, I'll tell you that much.
Yeah, and just a few more points on that. There's a lot of complexity that goes into building, number one, a smart order router, and two, having the operational back end to facilitate something like that. So that's a huge thing that we see as a value add to our clients here at sFOX is having a single account with us gives you access to this tremendous team of engineers and technology that you can just plug into with one API integration and say Bitstamp is going down for an hour for maintenance. No big deal. We just take them out of the book, and your trading experience is not really impacted in any way by that. You just keep going, and it's a very nice experience. Yeah.
Now, gentlemen, I'm excited to dig further with you. Before we do so, I want to just also highlight to the audience, we'll be chatting and hanging out for probably about 45 more minutes until the top of the hour. We have plenty of questions and topics to dig into, but one aspect of this, which we really value in the webinar format, is also Q&A. So if you haven't clocked this already, there is an open Q&A box as part of your regularly scheduled programming. And so if you find yourself with a burning question that you'd like to ask to the group or to any particular member of the group, especially things that can increase the practical value of this for you and your own efforts in the crypto world, please feel free to do so. I'll be keeping an eye on that throughout the webinar, and hopefully we'll get some good audience engagement. And if we don't, I'll bully you about it more than once before all is said and done. So don't worry about it. Guys, before we dig further into the specifics, I never really know exactly what kind of background we're going to get from the people hanging out in our webinars, because one of the things that is so interesting about the diversity of people and players in crypto is that as crypto has become rapidly sophisticated, I think plenty of people have become interested in the technology. Maybe they heard about Bitcoin or Ether in early days, and they've kind of fallen down the rabbit hole of asset management, maybe even without realizing it, and are starting to learn more about the nature of the ecosystem and the different players engaged with it. So I was hoping before we dive deeper, if you could just give a little bit more background into what the nuts and bolts at a high level are that Samara Alpha is engaged in and that sFOX is engaged in. For instance, Adil, from your side, we've already used the term asset allocator. When we talk about Samara Alpha and just what it does and the role it plays in the market and how it might relate to some of the individual traders managing strategies and their own stacks of assets on a platform like sFOX, how would you explain your firm to them in a way that can help them understand your role in the market and their activities?
Sure. So firstly, we have a product that we're out there with. We're raising capital for and investing capital. It's a purely market neutral crypto multi-strategy sort of fund of funds / managed account. What do I mean slash is that some of our allocations are to actually as LP, as investors in existing hedge funds. And some of them are like, we open a managed account, we put the money in there, and traders trade that capital, similarly to maybe they could even be an sFOX, through an investment management agreement. But the whole construct there is to have alpha in the market and no beta to the cryptocurrencies or anything else. So these are strategies like exchange arb, like we touched on, or the basis trade where you buy the underlying, sell the futures, everything that really does not depend on the market going up to make money. It's more providing liquidity in one shape or form or the other. Stat arb that existed in equity, in the equity world, now is being applied to the market neutral crypto world. So that is a dollar-based fund that we have, which you give us dollars. We invest in all these different strategies, which some of those traders and sFOX might become a strategy at some point, and we can invest in them. That's a dollar thing that has no beta whatsoever. The interesting thing, we also have a Bitcoin denominated version of the same exact thing. So there, the investment is in Bitcoin. The fees, management, performance, all fees are in Bitcoin. The performance is in Bitcoin. It doesn't really touch fiat in any way. So what does that give you? That means that if you have $1 and you put in this Bitcoin plus fund, your dollar buys a Bitcoin day one, puts it in the fund, and then whatever returns, let's say you give us 100 Bitcoin, we give you 110 back. The fees are only on the 10 Bitcoin. Even if Bitcoin doubles and you get double your money back, it doesn't matter. That's just your beta. The beta is for free. So that's a very interesting new product that we launched October. It's already up and running. So we have market neutral US dollars and market neutral Bitcoin, which gives you all the beta of Bitcoin plus a little bit more. So that's one piece of it. But the whole point is our history is to get in early with these hedge fund managers and traders. So, we did a whole bunch of seeding in the traditional space. We want to do the same thing in the cryptocurrency space. So find nice traders, good strategies, and you can go into what constitutes a good strategy in the future, but be the first dollar and support these people. If it's a defensible strategy, help them start a business, an asset management business. And in return, of course, we get equity or profit share or any number of things. And those constructs vary from firm to firm. and from strategy to strategy. So that's the second part of the business, which is seeding. And the third part is to do all this stuff, we have to build a lot of technology. And this is not technology like sFOX. We tap into sFOX. We tap into some type of other lending platform or brokerage platform or whatever. It's more like a buy-side technology. We need it to track the risk, and it's very much risk focused rather than execution focused. There are plenty of execution specialists out there like sFOX. We're never going to rebuild that, right? But to manage a portfolio and make sure that it is market neutral, manage the liquidity, make sure that you can liquidate people across all the different counterparties when it, that requires like a buy-side type technology. So that's the third leg of our business. So there you go. Yeah.
I love that. That's really helpful. We had a question from the audience in terms of expanding on funds or strategies that are used to generate profit when the market's not going up. So those kinds of market neutral strategies. And Adil, certainly you can expand on that. Daniel, maybe we can start with you though, because I'd love to get a little more explanation in terms of how you would describe sFOX when we use terms like prime dealer and exchange aggregator. And I know, like you alluded to when you were speaking earlier, a big part of sFOX's origin story and what one might similarly consider market neutral strategies, things like capturing arb across exchanges back in the earlier days years ago. So maybe we could expand on that a little bit.
Yeah, sure, Aaron, I'd be happy to. Just thinking from the perspective of a fund manager, what are the things that you're going to need to run your business successfully? And I think Adil will talk a little bit more about these components later on in the conversation, but looking at it from the sFOX perspective, you're going to need a bank account. You're going to need at least one exchange account. You're going to need a custodian. You're going to need access to borrowing and lending. You're going to need potentially, to run nodes and to be a node operator or to be a staking operator. There are a lot of things that you can do, individually on your own. As an individual, that's most of the approach that people take, right? So if you just want to do this as an individual, go out and get a few hardware wallets or get a custodian account with someone who can do it for relatively inexpensively and set up and get your seed words, and you're kind of off and running. That's one of the beauties of this industry, is that there are, if you want to do it in a fairly trustless, decentralized way, you can do it, and there are great tools out there to help you in that regard. It's different though when you are a fiduciary for other people's money, right? And there's a certain standard that you have to hold yourself to, and that you have to operate under, sometimes legally and other times just professionally and ethically, to do things in the right way to protect yourself and your investors for if things were to go haywire, right? In the case of a simple example of a custodian, in sFOX's case, you're not required to hold any of your private keys with our custody setup, right? Whereas if you were holding them yourself and you accidentally lose the keys, it's hard to prove to people that you've actually lost the keys, right? To where when you operate with us, it doesn't work that way, right? So there's a risk transfer involved here, to where choosing qualified, reputable service providers is a great way to transfer risk in your operations away from yourself and to uphold those duties that you need to give to your investors. And sFOX has built a great all-in-one solution for that type of individual who's looking to work with a firm that cares about compliance, cares about regulation, but also cares about being on the leading edge of the technology side of things and doing things in the most secure way possible.
I love that. That's really helpful. Maybe thinking about the individual traders who are using sFOX and platforming into what you were talking about, Adil, with regard to the evaluation of individual traders as potential managers, as Samara Alpha considers potential people to add to their portfolio. I know you mentioned in your own history, you've had plenty of experience with building and experiencing the full life cycles of funds, even well beyond the world of crypto. So maybe you could paint a bit of a more holistic picture for us in terms of if I'm someone like an individual trader just hanging out on sFOX, taking advantage of its single point of access and all the services that it provides, what are the steps that I would take, and what are sort of the various benchmarks to hit in terms of my own strategy that can help me think beyond what my return is going to be tomorrow or next month, and more in terms of the sorts of things that would lead toward either the establishment of my own fund or taking in outside capital or just reaching something that is beyond my current level of asset management.
So let me start by saying that there are a few different components. Returns are the most important component, but so they're necessary, but they're not sufficient at all. There's, the return investment part of the business, then there's the operational part of the business, and then there's the marketing and sales part of the business. And those are the sort of three main components. And, I started a hedge fund myself in 1999, and I had only the first part, and it failed, right? At that time, I hadn't invested in a lot of hedge funds, and I was like, I would go out there and have a great meeting with an investor and, and just wait for the check to come in, little realizing that that was like never going to be sufficient. There were like 10 more meetings and 2 more departments that I needed to have, which I didn't have, right? If I had known back then, I would never have ventured. So so the first part, returns, higher returns are better than lower returns, but just because you had like 50% returns or something doesn't mean anything at all, right? Because I mean, in a year like 2021, if you had a 50% return in anything crypto, you'd be out of business. That was terrible, right? So, it's always relative to something, relative to what you're trying to achieve. If you're trying to achieve truly market neutral returns in crypto, unrelated to the price of any coin, you're going to be really hard pressed to get over 20 or 30%. And that's a great return in a market neutral way where you're not taking any beta risk whatsoever. If you're doing something with beta where you are taking market exposure, then you have to use some benchmark to measure yourself. Again, if you're up 50% when Bitcoin is up 25, that's fantastic. But if you are 2 times levered the whole time, it's meaningless. Then it's just you were 2 times levered. I mean, and leverage is great on the way up and it kills you on the way down. So again, the quality of returns is very important. So you have to measure yourself relative to other people or other strategies doing the same type of risk profile. How much money can you lose? Compare yourself to other strategies, you can lose that much money. And then, if you can lose all the money, then you better get 100x return, because that's like a venture portfolio, right? And so if you're coming up with some option-based strategy where every now and then you lose everything, it's just not going to work. So the quality of returns is very important, and you have to start out with comparing yourself to stuff out there that's relevant. Secondarily, the operation standpoint, that's the first part is fine for your own money and friends and family money. And if you're starting out your hedge fund journey, first step is get that family and friends money and start trading a portfolio that is a closed system where you can track every single trade and demonstrate to someone that what you're actually doing makes money. Because whether you're a quant trader or a discretionary trader, you'll only remember your good trades. You will forget your bad trades, and you'll be fooling yourself, let alone the investors, right? So first, don't fool yourself. Make sure that you do know that this thing makes money, whatever it is. But operationally, before you can take outside capital, you have to make sure that you have all the controls in place to make sure that any investor can be assured that no rogue person at your firm can wire money in a different place or send coins to a different place. So, you have to make sure that the bank accounts that you have open will stay open, that they're not going to close. You want to make sure that, your accounting is proper so that when you report a return to your investors month by month, at the end of the year, the auditor doesn't find out, oh my God, they didn't take these expenses into account, and now you have to reset a NAV and you're out of business. There are many reasons. Oh, even something simple like if you're habitually late every month reporting to investors, they will pull their money, because on the other side, they have investors, they have people to report to. And if you're late, it doesn't matter if you're the best performing fund in their portfolio. They're getting so many questions from their own investors, they're going to pull the money. So operations is super, super important. And then the third thing is marketing and asset raising. I mean, any asset management business is about managing assets. You have to get the assets, you have to keep the assets, and you have to keep growing the assets. Why? Because assets will leave even if you're the best performing hedge fund. Why? Because people die. Estates die. CIOs leave their office. And so that might have nothing to do with you, but you will have some turnover. I remember the first time we got over $1 billion in protege partners, we're like, okay, we're home free. Now we can relax. And guess what? We were still losing $100 million a year. Why? Because 10% of your assets will leave for whatever reason, some CIO change, some portfolio strategy. So if you have $1 billion fund, you need to raise $100 million just to stay in place. If you have a $10 billion under management, you have to raise $1 billion a year. So these big asset management firms, they have marketing and sales, not because that they're not successful, but because there is turnover in the industry. And that's like a hard lesson we had to learn, right? So those three things, all three have to be in place.
There's so many good
I love
examples of this type of thing in the industry. I mean, just take a look at an example year of 2017. You look at someone who did nothing. There's a famous tweet from someone about, you ran your quant models and did all this trading and made 100% this year. Me, I sat in my Bitcoin position, did nothing, and made 1,800% this year. So it is all relative here, and you cannot take out
my best trades. My best trades are the ones where I did nothing, but that's not a business.
yeah.
I like that idea too, of thinking about the holistic business management. The last thing you mentioned, Adil, in terms of just the inevitability of assets leaving me, it reminds me of that great Alice in Wonderland quote where the Red Queen says, "It takes all the running you can do just to stay in place."
Exactly.
Sounds like standing up a fund is a little bit like that.
Yep. It's a thankless task. Don't do it unless you're totally committed and a glutton for punishment.
There's
I can't tell if that's encouragement or a warning.
Yeah. Letting the business you're in get in the way of running your business. Right. That's the way I think about it. Having a trading strategy is just a portion of what it takes to run a successful fund and to be an asset manager. Yeah. So
now, Daniel, we had a question come in a few minutes ago specifically for sFOX. So I want to make sure that gets voiced before we move on here. Someone asked with respect to diligence, how does sFOX conduct diligence on QC? And do you have examples of current QCs sFOX utilizes?
Yeah. This is a great example of how sFOX, works with others in the community. Being a qualified custodian, through a trust company, is most common here in the U.S. sFOX does have a trust company in the state of Wyoming for the last couple of years, which has been a great leg up for us in that market. But that being said, it's very common for clients that either trade with us, custody with us, or have other services with us to not exclusively use sFOX, right? So there are lots of good custodians out there, and we like to work with frankly all of them that we can work with, and we do like the approach of working with a qualified custodian. We think there's value in that. Like it or not, there is value in having a regulatory structure for a certain type of client, especially a managed hedge fund type of strategy. The way that we are able to do that effectively is essentially through the flexibility of our product. To take an example, say a client, they have part of their custody with us and part with another vendor. We can have their account set up to where they have flexible settlements, to where they can still trade on the entire value of their portfolio without having all of those funds on the sFOX platform at any given time. And from a workflow simplicity standpoint and kind of the business of running your business perspective, it really simplifies the operations of the business. In traditional finance, it would be very rare for you to be moving funds between custodians just to execute a trade, right? But in crypto, that is extremely common, and it's very common for people to have multiple or even dozens of wallets that they operate in regularly, right? The way that we're able to structure that through flexible settlement and post-trade settlement allows our fund clients and more sophisticated users to be able to access the liquidity in the market and do the trades they need to when they want to trade, and then handle the settlement workflow after the fact. And it really allows you to take advantage of that time. These markets move, they move quickly when they move, and you've got to be in the right spot at the right time to get those returns and capitalizing on your capabilities.
Hey, Daniel, curious, just a quick question on my part. Is there a minimum amount that makes sense with which to open an account at sFOX if you want to take advantage of all the capabilities that you guys have in terms of leverage and everything else? What's that number?
Yeah, it's a good comment. We so out of the box, just coming in off the street and creating an sFOX account, you get a lot of functionality. You get all of our smart routing capabilities. You get access to both an aggregated order book with all the venues we support. You also get access to, you know, RFQ trading out of the box, depending on how you like to show your fees. We do have a custody product that you would need to sign up for separately to operate with our trust company. And then to get access to our post-trade settlement product, you need to have $1 million in assets, typically. So there are some limitations to leveraging all of our services. We do support shorting out of the box for a client at any level, but for our main post-trade settlement product, you need to have $1 million in assets.
That's interesting. You allow shorting because some of the most successful market neutral strategies, and this is kind of in reference to George's question there, is stat arb. And I mean, stat arb essentially, you know, in equities and bonds is just looking at related assets and how far they move from their kind of expected values, and then, you know, either putting on trades that they're going to revert to their expected value or they're going to diverge from some value. Just put on a bunch of those, but you are long and short things at the same time. So your balance sheet always looks like, you know, X long and X short, whether that's related coins like maybe Ethereum, Ether, and things in that ecosystem, or Solana and things in the Solana's ecosystem. But it necessitates always having a borrow or a perp short against it and moving that around a lot, right? Because these strategies often trade multiple times a day, if not multiple times a minute in some cases. And you need to be able to have that short on and off whenever you want without having to wait for extended settlement. So that's a strategy that would work well with that capability.
Yeah, definitely. And that just, it raises a good example of something that a capability that we have here at sFOX that not everyone has by a long shot, is just the ability to segregate collateral to a holding account. So say you hold Bitcoin and you want to short, but you don't want to sell that Bitcoin because you have a favorable tax basis. You know, you can segregate that Bitcoin to a separate account, go short, and then depending on how the trade goes, settle it in any number of ways. But just thinking through those types of things that a retail user is not really going to appreciate, that a more sophisticated person would, that we've built out on the platform to help you not only get better execution, but also manage yourself from a tax point of view.
Actually, that's interesting. The segregated Bitcoin situation, we use the same construct for our Bitcoin denominated fund. So, you know, US investors who have appreciated Bitcoin, you know, we open essentially a BitGo custody account, or it could be some other custodian custody account, and they never lose control or ownership of that Bitcoin. We just then, you know, borrow other Bitcoin against that, have that be in the fund and do some type of total return. So again, these are, you know, very normal and proper tax optimization strategies, because you don't want to have to, you know, take capital gains when you don't have to. And it works out pretty well.
Yep.
Maybe we can use that as a good segue into I don't want to say the normal versus the abnormal, but Adil, I love that you went back to stat arb. Well, but really, I mean, and I'll give a little bit of my personal background, right? I'm really interested in thinking about the intersection of crypto and blockchain and the whole new world of finance with sort of more traditional asset classes and what they can learn from each other. My last thing before sFOX was basically figuring out how to tokenize single family residential. So old in the new and good stuff like that, right? And so my ears perked up, of course, when you were talking way at the beginning of the webinar about all of the rich background that you and the rest of the team have with regard to traditional asset management, which clearly shows in terms of the application of tried and true strategies. And like you said, everything that's, you know, table stakes as opposed to rocket science in asset management generally to crypto. But then, of course, there are some things with crypto that at least superficially seem different or new, things like decentralized finance, you know, things like staking. So as you think about it, both in terms of individual traders managing their portfolios, and then also on the scale of a fund of funds like Samara Alpha. How do you adjudicate and think about the lessons to take from traditional finance with the dynamics of crypto that might be new or novel with regard to this particular asset class?
Well, let's take DeFi, which is the more interesting part of it. I mean, staking certainly comes into play, and let's get rid of staking. Staking ends up being like, if you don't stake stuff that you have in inventory in some proper way, then you're just leaving some money on the table. It's like you had cash in an account in your normal hedge fund and you decided to just leave it in the bank rather than buying T-bills. Why wouldn't you buy T-bills when you can get 5%? It's just proper asset management. You're going to shoot yourself in the foot if you don't stake the coins and stuff that you have. So that's one part of it. And the analogy traditional is exactly cash management, right? On the DeFi side, it's super interesting. I mean, that is something that when we tried to do this back in 2017, 18, there was no DeFi. So all our strategies were basically CeFi type trading oriented strategies, buying and selling from centralized exchanges in different jurisdictions with options, blah, blah, blah. Once DeFi came about, lots of interesting things. Firstly, it's just a different pool of capital, right? It's a different liquidity pool. So now you can buy and sell in CeFi versus buying and selling in a DeFi protocol. So it gives you something completely different. Secondarily, it's transparent in the types of levels where various different AMMs will be liquidated, et cetera, et cetera. So suddenly, I liken it to the old options traders on the floor of the exchange, where they could see the stops that were in place and they could run the stops and then make some money that way. Yeah, this is now on chain. So there's AMMs and you can see what the equations are. You can see what the size of the liquidity pool is, and you know where to push the stops basically. And then you can have bots doing your trading and you can make some money that way. So there are analogs, but operationally so different from back in the old days yelling in the pits, or then having some exchange algorithm that's running. Now you have to have like different APIs to the different decentralized protocols and have that do the work for you. It is very, very interesting. And the fact is that you have new DeFi protocols spin up all the time. And those new protocols have their different incentive structures. And the people who can figure those out faster have an advantage. The people who can trade faster have an advantage. So again, in 17, 18, there were just people clicking on screens. Then that got automated. Then DeFi came along, and then the bots came along. And now, unless you have fully automated access to the markets and are pretty good, you are not going to be able to compete against the people out there. Literally, we have investments with teams that are dozens of people strong. Just reverse engineering APIs and reverse engineering protocols that come about. There's an ecosystem of protocols that incentivize market makers to make markets in their coins, and this whole thing might only last a few months for the unsuccessful tokens, and for the successful tokens it goes on forever with more and more sophistication. So it is just great that there's this diversity, and the people involved now have changed from being the crypto natives who don't have the technological capability of trading and stuff like that. And the people who are getting into it are the HFT traders from Citadel and Millennium and what have you. So, they have to figure out the DeFi. The DeFi people have to figure out the automated trading rules and risk management and all that. And it's unclear who's going to win the race. I think some people from one side will figure out the other side, and some people from TradFi will figure out the DeFi side first. But
I was going to ask you, I was going to put a gun to your head and say, where do you see the end game of this? Like, is Citadel going to eat everything? Is there going to be some kind of like hybrid, prop shop that we haven't even imagined yet coming onto the scene? It's a hybridization. Like, where do you think the sophistication will be in the market in 2 or 3 years?
Thank God the market is too small for Citadel at the moment. Yeah, at
Fair.
the moment there's still room for small people doing small stuff, because if you take the entire opportunity set, right, it's $1 trillion now, right? Market cap, and whatever. I mean, equity markets globally are 110 trillion, bond markets are 150 trillion. So you're talking about like 0.5% of the global liquid markets in crypto. right? So the big guys, I mean, if you're a big pension plan or big, forget it. You're not even going to be in the space. I mean, we had easily the endowments, the allocation size is like 300 million for one manager. 300 million could be my entire portfolio of 12 different market neutral strategies, and they're already hitting capacity, right? So really,
Right.
it is a good experimental place for the mid-sized to smaller investors right now. And I think what will succeed in the end will be some behemoth, and it'll probably be a behemoth that swallows up some of the small guys at the moment. But I don't think we have to fear about the Citadels of the world right now, because it doesn't pay them to be in this market right now. It's just too small.
That makes sense. I know you talked about this a little bit earlier, but just for the benefit of those in the audience, I want to ask you a little bit more directly, Adil. So let's say I'm an individual trader, and I just heard what you said about it being a good market for the small to medium-sized guys. So I'm stoked about that. If I'm trading somewhere like sFOX and I'm interested in potentially, reaching the point to be evaluated by a place like Samara Alpha and considered for an allocation, like, what would that look like? What would the checkboxes be that I would want to mark off? How would I, start actually, turning not just my strategy, but also my operations and hygienics and my overall performance toward that goal?
So the operations and hygienics and the marketing, I did say that is super important, but that can be done easily in some sense, right? You just have to be open to it. So you have to be open to the fact that just your investment management returns is not going to be sufficient. But you need the investment management returns first. You can't start the business with like, oh, I want to start a hedge fund. Let me get the operation. Like, there has to be a core alpha generating machine there, whether it's your own head, whether it's an algorithm or what have you. And how do you demonstrate that works? You have to demonstrate that works in some statistical fashion. So people always ask me, like, how long a track record do you need? Well, if you only do one trade a month, then you need 100 years. But if you're doing that, because that will give you enough data. So literally I've seen people come up with like, yeah, I did these 10 trades last year and 7 out of 10 were amazing. And look, I'm up 200%. I'm like, I could have flipped a coin and gotten there. That's not statistically significant, right? You cannot prove it. Doesn't matter at all. So you have to demonstrate to yourself and everyone else, okay, here's something repeatable that makes money on average. So very old school, like how many winners versus losers, how likely would this have happened by chance? So if you have 10 trades a year and 7 out of 10, that could have happened so easily by chance that it doesn't prove anything, right? So you need to have the track record in a segregated portfolio account where you can track everything. If you can have friends and family money in there with you side by side and real trades. I can't stress how important real trades with real money at risk is. All paper records are useless, completely useless. No matter who you are, even if you're the most sophisticated trader, it will be useless, right? Because you just don't know. You just do not know because markets are reflexive. Every trade you do affects the market. So if you're looking at trades already done and saying, I would have bought this, I would have sold this, it's nonsense. It is actually nonsense. So don't even go there, right? Start the trading with real track record. Once you have 6 months to a year with your own money, get friends and family, get people who you have traded with in the past to put money with you, because I'm not going to be the sucker to bet that you're telling me the truth. I want you to have sat next to someone on a trading desk or with your friends or whatever who have known you, who are putting money with you first. Then after that goes on for a while, then you come to people like us at Samara Alpha who have institutional capital and say, okay, I can demonstrate statistically, for a fact that this is very unlikely to be luck at scale. We can see it in the numbers. Then we go into the business development. Like, are you open to having a CFO, to having some controls on your trading so that you can do anything you want? The money is locked up in the bank account, blah, blah, blah. And then you also have to have marketing, because as I say, your business is not going to succeed unless you also add that marketing thing, and you have to spend money on that. So this then becomes a business, and then we can go from there.
It's so interesting the way you talk about it, Adil, because perhaps this is intuitive to people, but I wouldn't have schematized it in my head like this without you saying it. It sounds like, in terms of the the flow and the steps of getting capital from outside people and starting with your own skin in the game, and then friends and family, and then approaching outside asset allocators after that. It sounds remarkably similar to advice that you get when you're starting a startup, right? Just any kind
it
of
is.
regular business.
100%. Yeah, 100%. Yeah, if you just say, I'm gonna, build a rocket company, no one's gonna, unless you're
Right.
you
But look, I have all
Blow
these
himself
paper
up.
diagrams of my rockets.
Great. Just to touch on wrap up a few of the tooling components. I mean, just talking through the DeFi aspect of things, we at sFOX, we just recently launched a Web3 wallet, right? So thinking through that from a perspective of not only did these trades happen, but they're all wrapped into this single sFOX platform alongside your centralized venue trading. It just makes a lot of sense for people to streamline their operations in these ways. And then just talking about the fund operations, hiring a CFO, having that CFO have the capability to put eyes on any withdrawals going out of your account, and to also give a checker, maker checker situation. Not many platforms at all have that capability, and that's something that we have in spades, and much more than that as well. But just empowering people to operate in a professional and responsible way is something that we really pride ourselves on, and have a great tool set for it. So it's exciting.
Yeah, Daniel, perhaps you could also touch a little bit just on the whole post-trade analytics and the kind of like off-platform support that sFOX offers, because I hear Adil talking about the kind of data that a place like Samara Alpha would be looking for, and I feel like sFOX is pretty forward-thinking with regard to a lot of that stuff.
Yeah, and this is a way that we try to align ourselves alongside our clients and try to participate with them in making their business successful, and not be, in actuality or perceived as, as conflicted in any way with our clients' best outcomes. So a couple of those ways that we do that are, we, several times a week, our success team is sitting down with clients to go over the success of their trading, both from an execution standpoint and from a strategic standpoint, to say, okay, you did these 10 trades in Bitcoin this week. You used this particular order type of our 15 different smart routing order types. Let's talk about what you wanted to accomplish there. Were you trying to minimize slippage or maximize fill rates, or what is your strategy call for? And then trying to coach clients to use the platform and these great tools that we've developed to get the best outcomes possible, because there is a lot of variability in how you can use these tools to accomplish your goals. And frankly, in the conversations we have, you'd be surprised how often, seemingly similar clients have different goals that can be impacted by small changes in choosing the right algorithm, or modifying their TWAP time from 30 seconds down to 5 seconds. Having those tools available and having our team available to coach you through those types of educational things really can make meaningful difference in your annual performance and the amount of fees you're paying and the better prices you're getting. So it's pretty great. And we just take a very hands-on approach with our success and client services teams as well, with dedicated professionals, Slack channels, Telegram channels, WhatsApp, cell numbers. We are always available to talk about your needs, and it helps us because we almost exclusively deal with professional clients. So we're in a good spot to give that level of service.
Well, gentlemen, we're wrapping up in the last 9 minutes, so I'm gonna call one more time for Q&A. If anyone wants to ask any final questions of our esteemed panelists, this is a great time to get those questions in so we can have them seated. But as we let people stew on that, I wanted to really bring things around full circle. We've spoken a lot about the nature of crypto as an asset class, what it takes to develop oneself as an asset manager, where we've been, and a little bit of where we're going. But I'll ask you a bit more pointedly as we're staring down the end of the year already, if you can believe it. I can't, but it's already just about the middle of October. So looking ahead to 2024 and beyond, what are the big things on your radar and on your company's radars when it comes to the advancement of the sector? Anything from protocols you're thinking about, to particular question marks and assets, to broader scope things like regulation or adoption. What's keeping you up at night? What do you think the main narratives are going to be going forward from here? And how are sFOX and Samara Alpha thinking about how to position themselves and what it is that they do to contribute to the market and their stakeholders' success going forward?
So, I mean, for us at Samara Alpha, it's a really exciting time because the quality of people coming into the space and what we see out there is just amazing. These are super bright people, super enthusiastic, and they're making new things all the time. So, which brings me to the point of what do we look for in the future? Is just to be very, very flexible. Like DeFi didn't exist 2 years ago, right? So, now suddenly it is, and it's a vital part. If you could say, oh my God, DeFi is new, let's not even go there. But then we'd be missing out. So the idea is if you put a small amount of capital in all these new things, that's our idea. It's like diversify across many different things. Don't be limited to any one type of investment or whatever. If you can get a source of alpha, go after it, put it in a little size, make sure you risk manage it and go forward. We found that in the US, there's amazingly bright people doing great stuff, but regulatory, they're like reluctant, and I can see why. So when we were in Asia a couple of weeks ago, the whole atmosphere is so different and so like dynamic. I think lots going to go on in Asia and the Middle East. So be there. We're there. Why not? It'll eventually come back to America. These things go back in cycles. You can already see, like, once all the octogenarians get out of power in this country, it'll be the age of DeFi because the young people are fine with it, right? And it's the same thing with the internet and everything. Like it takes a little while for things to become normal practice. Even with things like Uber. I always love the Uber example. Like, when the internet first came out, we would not meet anyone on the internet. Do not do that. And now we jump into cars with strangers all the time that we meet in that nothing changed technologically. It was just a social way of being that changed. The same thing is going to happen with blockchain and crypto and this type of way of moving value around. We'll just trust it more. Suddenly we'll trust it more than the banks at some point, and then it'll become normal. And then, crypto and blockchain will be used in the back end. No one will be actually knowing why they're using it, but it'll just happen. Somebody just asked the pros and cons of commingled versus crypto SMA and all that. I mean, there are pros and cons. The big pro with an SMA is that you have full control of the assets. Like you can shut it down anytime you want. The big con is that there are various strategies you cannot do very efficiently in an SMA. Take about market making in the exchange arb. There are funds out there that have 15 different exchange relationships, and they're trading 50 different coins, and they're updating the APIs all the time. If you had an SMA and you had to onboard and keep, impossible. You would not get the same return rather than the commingled hedge fund. So again, there's no panacea. There's no silver or golden bullet. My main thing in the future for technology evolving so fast is to be flexible and diversify. Even if you see the best thing in the world, you cannot put 100% of your assets in there. And something that seems dodgy, well, like Dogecoin, put a little bit, right?
Don't not do it. Just put a little bit.
Right. Be flexible.
Be flexible and risk manage. Risk manage. So, high risk, small amount of capital, less risk, large amount of capital. I mean, counterparty. Look, centralized counterparties are a risk. If you do DeFi, you get rid of that risk. But now you have something else. You have all the protocol risk. You exchange one risk for the other, but you should have both. Why not? And then you get the true diversified return stream. Yeah.
Yep.
Yeah, that's Daniel, how about you from the sFOX side?
Yeah. That's a big thing for me, is understanding the risks you're taking and realizing that there are going to be trade-offs, and anything you choose is going to have trade-offs. And if someone tries to tell you that there are not any trade-offs, that's the biggest red flag I can probably think of. From the sFOX perspective about things that I am personally interested in and excited for, is I really see a lot of very positive signals from deeper integration into the traditional finance space, whether that is banks and credit unions or RIAs, IRAs. A lot of people have spent the last year, building out these connectivity points into the market. And, firms like sFOX, we have great tooling for those types of clients to offer, to bolster, their brokerage offerings to now support stablecoins and crypto payments and custody, all from a single integration standpoint. So there are a lot of really positive things, and just further proliferation in the mind share of people to know that Bitcoin and crypto are not going away. I think there is a tremendous opportunity for stablecoins globally to gain market share, and I think it could be a really humongous proliferation of the dollar globally, and we see a very, very strong, very strong interest globally across South America and Africa as well in stablecoin proliferation. So I think there are a lot of positives going into Q4 of this year, and it makes me very excited for 24 coming.
We had a great question that smells to me like a nice question on which to end. If either of you has any book recommendations that paint a picture of where the future of finance is going, anything for our devoted listeners and watchers to add to their reading lists?
Oh God. So there are no books in this subject, unfortunately. So that's what I found out, that by the time a book gets written, it's like over already. So
oh no,
unfortunately, I have to say podcasts are the way to go. Podcasts and conferences seem to be the only way to keep up with this stuff, honestly, right? So and in podcasts, the Laura Shin podcast is always a starting point. And then there's a whole list. Someone can DM me or whatever. There's like stuff that I listen to, all the time. And that's the only way you keep up with it. No books. They're just books.
I think we could put out
a whole world
after the fact on some books and podcasts. One book that has come out in the last 2 weeks or so that I'm personally excited to read is Lynn Alden's Broken Money. It's about how our financial system is failing us and how we can make it better. She's a fantastic macro analyst, and she really understands Bitcoin very deeply. And I would highly recommend checking out her new book called Broken Money.
All right. Well, we got at least one book and advocacy for podcasts. I can see both sides of that, no doubt. I am confident that we could talk for another hour if we had it, which is a wonderful place and note on which to wrap up. So Adil, Daniel, one more time, my friends, I want to thank you so much for taking the time and having this conversation. As I anticipated, I myself learned a lot, so I'm selfishly grateful. I hope our audience feels the same way. I'm sure that they do. If you did attend, we'll be sending out the recording of this, which will be available on sFOX's YouTube channel, so that you can check it out anytime you like, share it with whomever you like. And we'll also have our contact info in your inbox if you'd like to learn more about Samara Alpha or sFOX. But for now, again, gentlemen, thank you. It's been such a pleasure. I'm really excited to see where the future of crypto goes, and I feel all the better knowing that capable leaders like yourselves are at the helm of it.
Thank you very much, Aaron.